Before we dive into the technical analysis itself, we have to discuss several terms that I'm going to be using as I'm going through the course. First such term is price action. Price action is a price movement of a certain asset over some range in a defined period of time. So for example, such price action can be that the price of Ripple, which is a cryptocurrency, has risen from $30 per one coin to $40 within an hour. So from 30 to 40 is the range, defined period of time is the hour, and some asset is going to be Ripple in our case. That is called the price action. When it comes to these price movements, we also have to understand that there are several kinds of them. An asset can be trending, which is moving up or down, or it can be ranging, which is moving between two price points with no dominant direction. Another term is a breakout. A breakout occurs when a stock moves above a price resistance level. This usually happens on a heavy volume. Now, what is a resistance level I will explain to you within the resistance and support levels video, but from the name itself you can definitely understand that the resistance level is an important price point that is hard to overcome. So, a breakout occurs when this resistance level is finally broken and the price moves beyond it. Heavy volume means a lot of orders at that particular point. If you need to break a strong resistance, you're going to need a lot of people going in the same direction. That is why heavy volume is tightly connected to a breakout. Next, we have momentum. Momentum trading refers to buying or selling an asset right before an expected move. For example, through technical analysis, you conclude that the price of an asset will rise. You therefore decide to buy the asset right before this breakout and just enjoy the increase in value. Buying an asset before a big rise is called going long. So again, going long is buying an asset cheaper before an expected breakout and then selling for a high price, preferably at the top of the breakout. Next to going long, we also have something called going short, which is basically just the opposite. It's concluding that the price will fall down and selling your holdings on time before that for still a relatively high price. That is going short, selling high with the intention to buy back after a short period of time when the price is the lowest. So let's say you sell your holdings for $100 per asset, and right after the value of this asset falls to $80, which you have suspected, you buy back. Therefore, you end up with more assets than you had at the beginning. Congratulations, you have successfully shorted an asset. I have to note though that the term shorting has been misused a bit in cryptocurrency. Officially, the term is used when you don't really own the assets, but you have purchased them on a loan from a broker. You did so at your own risk, expecting the price to drop. You then sell the asset, wait until the price drops, you buy back for cheaper, therefore you get more assets, and you only return what you have loaned plus broker's fee. The rest you keep. In cryptocurrency, this term though is being used for also just selling your own crypto high and buying back low. With this explanation, I hope you also understand the momentum now. Momentum simply means using the right moment to get the profit. Next, we have the volatility. That is probably a term that you have been hearing quite a bit in relation with cryptocurrency. Volatility basically measures the likelihood that a price of an asset will move over a short period of time, either up or down. If the stock price or the price of a cryptocurrency coin moves in a bigger range very often, we can talk about high volatility. Next, we have the terms bullish and bearish market. When we say the bulls are winning, it means that the market is going upwards, which means that the price is increasing. If we say that the bears are taking over, it means that there is a big dump in the price, which means it's going down. Therefore, a bullish market is the market that is steadily increasing in price, going upward, and bearish market is the market in which the value of stocks or crypto coins is decreasing. It's going downward. Then we have terms such as reversal, which is a change of trend direction. So if there is an upward trend, a reversal would be to a downward trend. Then we have trend indicator, which is used on a platform such as TradingView.com. When you are reading charts, you can use trend indicators that help you to determine how strong a certain trend is. So it helps us to determine a possible trend change. Indicators are already set up on all of these platforms. You simply just click on them and they show you numbers. Next, you have oscillators, which is more or less the same as the trend indicator. It is something that you set up on a trading platform such as TradingView.com. Oscillator is an indicator that consists of up and low levels and a line moving between them, crossing a center line. It can be used to foreshadow a trend reversal. Next, we have chart patterns, which is simply a formation you see on a chart, and this formation tells you something. What we will learn together within this course. Next, we have retracement, and that is when a trend reaches a high point and then drops back from there to a certain level. Usually 30 to 50% down the uninterrupted upward move, and then continues back up in the original direction. This is also called a pullback. Rally is when a trend reaches a low point and then rallies up from there to a certain level, usually 30 to 50% up the uninterrupted downward move, and then continues back down in the original direction. Hourly, monthly, daily charts, or any other, yearly, minute charts, they are referring to time frames of the displayed chart. On an hourly chart, one candle will portray 1 hour of trading. I know this may have not been a sufficient explanation, but we have a whole video on this topic, so please check for more the video about candlestick and other charts. Next, we have position, which is simply your holdings of a certain asset. If you own 10 Bitcoin, that is your position. Stop loss is something you set up when trading. It is a safety mechanism that gets you out of a position if the price reaches a certain level. This can be set up on a trading platform. Target price, that is the price point you want to exit the trade on. Therefore, where do you plan to sell? Okay. I hope this was clear. You will also find very short explanations of these terms in your technical analysis glossary. Please download this document and preferably print it and have it next to you, so whenever I say something you don't understand, you can just quickly look it up. Let's now move to the technical analysis itself.